Thanks, Anjali. Good afternoon. You're watching the Market Closing Show with me, Sakshi Patra. First up, let's take a look at what's hot in the corporate and the financial space. Markets extend losses amid Venezuela tensions. Sensex is now down 200 points at 85,500. The Nifty is nearing 26,300. IT stocks remain under pressure, while real estate and consumer durables see buying interest. Gold and silver prices surge after the U.S. Has captured Nicolas Maduro, who's also going to be increasing some of the global supply concerns and market volatility. Now the MCX gold has now jumped 2,000 rupees to 1.38 lakh rupees per 10 grams, while MCX silver has now surged 10,000 rupees intraday to hit 2.43 lakh rupees per kilogram. Oil stocks remain in focus but turn volatile after a strong start. Reliance is now down 1%, while ONGC has slipped 1.5% as early gains fade. Jefferies says cheaper crude could still support Reliance margins, while ONGC may recover over $500 million in unpaid dividends. Amid rising global tensions and supply worries, Jefferies has picked up Tata Steel, JSW Steel and Jindal Stainless as the top bets for 2026, with upside potential of 18 to 26%. Strong domestic demand, also safeguarding duties as well as recovering Asian spreads are supporting the growth prospects. Defense stocks jump up 5% as BL, HAL and Bharat Dynamics, also other peers, have rallied after the US military has raided in Venezuela, heightened geopolitical tensions. Remember, investors bet on higher global defense spending, lifting stocks like Bharat Dynamics, Solar Industries and MTR Tech in trade. Let's straight away look at how the markets are trading at this point in time. Viewers, we are in the last 20-25 minutes of trade right now. While the Nifty had slipped to the low point, we've seen slight recovery from that point. You can actually see a 0.25% of an uptick from the low levels of the trade, but still in the red right now. 26,258 is the level at which the Nifty is currently trading at. Yes, we do look at the real estate sector and some of the metal spaces that are still holding up, FMCG and even the smaller sector stocks. The small cap index is up and about, but it's the IT, the oil and gas space, infrastructure, financial services, the banks that have all slipped into trade. The top movers on the Nifty include Bharat Electronics, Nestle, Eicher Motors, Asian Paints, Ultratech, Tata Steel. These are the ones that are up by anywhere between 1.5 to 2.5%. On the lower end, however, you do see names like HDFC Bank as the top laggard now. You also have Wipro, Infosys, HCL Tech, Oil and Natural Gas, also Bajaj Finance as among those stocks that are still dragging in trade anywhere between 1.5 to 2.5% odd as well. Let me quickly look at welcoming Mr. Chokalingam, Mr. G. Chokalingam, the founder and MD of Economics Research, who's joining in with a fresh view on the markets. Warm welcome to you, Mr. Chokalingam. Good to have you with us. Do help us understand, right at the start of the new year, we have emerging geopolitical tensions that have rocked the world as well yet again. How are you looking at the sentiment on the street that had just started to pick up in the beginning of the new year, now marked by these fresh geopolitical concerns?
Yeah, this geopolitical tension is a new trigger for market to become weak. But otherwise also, we had a lot of concerns in the short term. I believe next 2 months market could be highly volatile with a downward bias. Number one reason, the latest geopolitical tension, which would give fear as to whether such a scenario can happen, some other parts of the world, like in other part of Asia. That is one major fear. And second, uh, prior to this, there were already 2, 3 areas of concern. One, the promoters have been continuously selling. They are selling, it's estimated to be more than 2.5 lakh crore rupees in the last 18 months. That also led to liquidity constraint, and IPO boom still continues. And apart from that, over 100 stocks which were recently listed through IPO, they are expected to see expiry of lock-in period for investors who bought those stocks pre-IPO.
Yeah.
So therefore, next 2 to 2.5 months, there would be a lot of pressure on the liquidity. And finally, 60 to 70% of small cap stocks are down anywhere 10% to 40% from their 52-week high or 18-week high, that is from September 2024. So that also led to a lot of squeeze in the hands of retail investors in terms of liquidity. So
Right.
therefore, next 2 months, particularly in small and mid-cap stocks, unfortunately, we have to see a lot of volatility with a downward bias. However, Sensex and Nifty would remain stable thanks to DI's continued support.
Right. We've also seen gold and silver prices inch higher because we've always seen whenever there is heightened geopolitical concerns, it's gold that always attracts more investments on account of safe haven appeal. Silver, which has been already on a record run, has also seen some uptick right there. Do you see further, beyond the kind of rally that we've already seen in 2025, gold and silver prices amidst these new world orders can also continue to surge even further?
I doubt. I may be wrong absolutely, but I have a strong faith that buying gold aggressively from investment point of view. So there is always a two types of demand. One is for short to medium term investment perspective, then another one is a long term, like you buy real estate houses. So there is no change because in the long term
Yeah.
also there is a possibility of rupee depreciating and therefore landed cost of gold will keep rising. So if you have a 5-10 years, yes, you can continue to buy, no doubt. But for 2026, I think the gold most likely to see significant correction because the demand already started slowing down. There are reports of one or two central banks also started selling, booking profit in gold, and most importantly, I don't think it is driven by global tension. It is more driven by momentum and a lot of aspiration from the young investors to make quick money. They were already successful in gold and silver, so they are continuing. This is based on a one particular logic that whenever there used to be global tension, war,
Yeah.
both oil and gold will flare up. Now,
Yeah.
oil is not at all flaring up. In fact, more than gold, oil
Yeah.
participate in the war also, but still oil is very weak. It's down 26% from 52-week high. So I believe it is too risky to buy gold for investment for current calendar year.
Right. So, Mr. Choklingam, which is the safe haven at this point in time within the equities that you say? To investors at this point in time, what should they be parking their money with?
Certainly, Sensex and Nifty stocks. Tactically, fundamentally. Tactically, DIs have been buying for the last 29 months in a row. So record level of buying, and that would continue because mutual fund AUM momentum of new entry would have come down, but the AUM continues to grow. So the mutual funds would buy, insurance agencies also would buy, preferably Sensex and Nifty stock. So the chances of losing heavily in Sensex and Nifty stock is very limited. For one more reason, the fundamentally economy is very strong, and except a trade war, you take any parameter, macroeconomic parameter. You talk about GDP, inflation, interest rate reversal, or manufacturing investment through PLI, even electronic exports. So any parameter you take, it is very strong. Food grain production
Sure.
again, third year in a row, record level of production. So combining these two, there is a lot of opportunity and stability in Sensex and Nifty. That would be the safest thing. But then somebody is willing to wait for 1 to 3 years. It is definitely once again small cap. Now we are
Okay.
better off in taking little risk in small cap because, as I said earlier, small cap
Yes.
stocks have fallen 10 to 60% also in the last 12 to 18 months. Even high quality stocks have corrected, and historically in the last 30 years, in once in 3 years, small cap booms like anything. They also fall badly, but then the
Sure.
volatility it is natural, but the return also from the bottom is natural. So
Absolutely. So
can,
for the long term,
can
you can still go ahead with the mid and the small caps. But in case you're looking at some near-term investments, then it has to be in the large cap names within the Sensex and the Nifty. But stay with us, Mr. Choklingam. The global macro landscape, viewers, which has been now jolted by this sharp escalation in US-Venezuela tensions. Washington's move goes beyond oil. It also aims to curb China, Russia, and Iran's influence as well. Venezuela's vast oil and gas and critical mineral reserves now make it a key geopolitical flashpoint. And to understand more on this, we're now joined by Mr. Narendra Taneja, the energy expert with us. Warm welcome to you, Mr. Taneja, and good to have you with us. Well, first up, help our viewers really understand how do these US actions in Venezuela really affect the global oil supply and crude prices in the near term. We've so far not seen any knee-jerk reaction on the oil prices. In fact, it's slightly lower. So no flare-up there, which is a big relief for oil importing countries like us. But what could it happen over the near term?
Well, in short term, actually, we don't really see any negative impact in the sense because, Venezuela may have the largest oil reserves in the world, which are in the region of about 300 billion barrels to 400 billion barrels. But it's a very small producer. They produce hardly 800,000 barrels of a day. And if you look at the list of the major country exporting oil, they're not even among the top 20. So they're not a significant player in terms of the global oil supply system, but they're a very important player when it comes to the medium to long term horizon. So right now, if you look at no impact at all, but at the same time, the fact that Americans have moved in there, and President Trump has made very clear that American
Yeah.
companies are going to into Venezuela and and invest in so on and so forth, which means oil production in time to come, maybe from 1.5 years to 2 years to 2.5 years, from out of Venezuela will go up, which means that it may go up to even 2.5 to 3 million barrels a day. That is going to be a significant contributor then to the global supply system. And what does that mean? If there is a new kind of contributor, a new player in the supply system, Venezuela, that means more oil, and more oil means basically prices will come under pressure and will
Yeah.
start further down. So that's, if you look at from the Indian viewpoint, as you said, since we are energy deficit, third largest importer of oil, third largest consumer
Yeah.
of oil, it's not a bad news. It's geopolitically speaking, we are in the Wild West. Very difficult to decode things and analyze. But given that, hopefully that as far as oil is concerned, that's not a bad news for us.
Not a bad news for us. What about Indian fuel prices? Because remember, we're already reducing our imports from Russia. And Donald Trump, even as of overnight, has indicated that India's Indian Prime Minister, Mr. Narendra Modi, should make him happy by completely telling them that, we are not importing any oil drop from Russia now. Since the narrative is still the same, how does one really anticipate whether these blowing tensions with Venezuela, what kind of an impact can it happen on Indian fuel prices, sir?
Well. Trump is Trump. Even God can't make him happy. I mean, what does Modi wants? I mean, he's moved into, imagine moving into a sovereign country, kidnapping the president of the country along with his wife and bringing him to New York and say, you got to face American law. He's not American national. But that's the world we are in today. But to answer your question now, you see, there is plenty of oil available in the world. Demand is not rising except from few geographies like India, Middle East, and a few others. So we don't really need to worry. There's plenty of oil available. If Venezuelan oil starts flowing further more into the market, that's good news. Guyana oil is there. Guyana is just next to Venezuela. And
Yeah.
and President Trump has already threatened Colombia, which is also a significant, contributor to the global supply system. All, when you look at the horizon and put everything into the basket, geopolitics, demand, supply, and everything, what you get out of it, as far as the supply is concerned, we don't need to worry. As far as the price is concerned, in short term at least, we don't need to worry. But as far as the overall geopolitics is concerned, power play is concerned, and all that, that's we need to worry, because we are now in kind of world, into a world where it's very difficult to predict future. And especially for a large economy like India, we are globally integrated now. You see, so since we are very globally integrated, the kind of games and the kind of things which are going on out of Washington D.C., not only India, the entire world is very worried about. So when you look at strictly oil, we don't need to worry too much in terms of price. But when we look at the overall global geo-economics landscape, you see worries and worries all the way.
Sure. You did point out that there is no worry when it comes to the supply. In fact, this is in a way good news when Venezuela's oil will also come into the market, because right now the production is very low. OPEC Plus has constantly been holding the output steady as well. In case one has to just foresee what could be the prices in 2026, how would you really assess that, sir?
Well, I think, with what has happened in Venezuela, it has put OPEC on defensive, in the sense that because it's not only Venezuela. Basically,
Okay.
Trump is trying to be the boss of the hegemon of the entire Western Hemisphere. And what does Western Hemisphere mean in terms of oil? Major oil producer Canada, major oil producer Mexico, major oil producer Brazil, and couple of in Guyana and couple of other. That means they are all going to be part of the American, geopolitical and geo energy play, and that
Yeah.
means that's going to be a kind of informal bloc which is going to put pressure on cartel called OPEC. Is that a good news for importers like India? Not a bad news. So OPEC is going to be under pressure, but at the same time, OPEC is very good in playing this game, while when it comes to President Trump or the United States under him, highly unpredictable. They don't play long games like OPEC, they play short games. Therefore, it's going to be very interesting to watch.
Absolutely. And do you anticipate then that US and the narrative from the White House will be the one that will decide as to what happens to the energy sector, how the prices flow in, even in the next 3 to 5 years per se?
Well, that's a very, very interesting question. You see, short answer to your question is yes, because President Trump does not want oil to go beyond $60 per barrel. $60 per barrel works well for American economy to keep inflation in check. At the same time, $60 per barrel keeps Russia under pressure, keeps Saudi Arabia under pressure, geopolitically speaking. But at the same time, with the kind of the new geopolitical chessboard which is emerging, Saudi Arabia, Iraq, Kuwait, these Gulf countries are not going to be that important in time to come, in years to come for the US, which means that they will need America more than America will need them. And that means that they will have to listen to America. And America does not want oil prices to be more than $60 per barrel. American economy is used to cheap oil. And Trump is trying to do everything possible to make sure oil never goes beyond $60. Venezuela, he has not gone to Venezuela for anything. He has gone there just because it has got oil. Had there been no oil in Venezuela, President Trump wouldn't have really even bothered to look at the map of Venezuela. It's all about oil.
It's all about oil. Help me understand, what impact are you seeing on China's oil supply chain, considering it imports maximum of the oil from Venezuela? What alternative sources could China really turn to after the strike as well?
Well, that's strategically speaking an important question. I mean, there are many who are saying he's doing all that he's doing to strangle, kind of Chinese economy in terms of energy supplies and so on and so forth. With the entire Western Hemisphere now coming more or less an American, American influence or under footprint, and that means China will have to look at other sources of energy. And at the same time, as I said, the Gulf countries will have no option but to actually get even closer to the United States for its security, for overall security, because there is Iran and there are other countries, which means that America is going to exploit it and it's not going to really help China. Therefore, if you look at the data of the last 3 months, China probably could sense it. They had been buying oil left, right, and center from every country and storing it. They have been storing oil like mad, last 3 months. And at the same time, Venezuela owes $80 billion to America, to Russia and China. So what's going to happen to the $80 billion? By the way, they also owe $1 billion to us. That's a different story altogether. But this is the kind of scenario. So overall, if you look at it, you look at the emerging landscape from China, from Beijing, is very, very risky and very, very tricky. So China is worried. And if you look at the overall game, China is at the disadvantage as far as the whole game is concerned at this stage. In short term, China is not the gainer. But as far as India is concerned, there are lots of things to worry. This Wild West geopolitics is bad for us, is not good for us. But as far as oil price is concerned, that's not a bad news.
That's not bad news. Well, thank you so much then, Mr. Taneja, for being with us on the show and, of course, helping all our viewers really understand what the latest US strike on Venezuela really means for the oil prices, for the geopolitics, as well as the geoeconomic scenarios that will emerge going forward. One thing is clear, viewers, you don't have to worry about in the near term, in the medium term, about any impact on the fuel prices. Even now, Brent crude is trading at around $60 a barrel, and that's what Mr. Taneja has pointed out, that US will do everything to keep oil prices low. It's also good for the US economy because the inflation will be under check as well. And that's in a way good news for India, because in case the global oil prices continue to remain subdued at around $60 a barrel, India, which is an oil importing nation, will continue to benefit. But what does this really mean for the geopolitics and geoeconomics as far as the energy sector is concerned? How the narrative will be controlled is something that one has to definitely keep a watch on. And Mr. Taneja definitely points out that China, at this point in time, at the immediate end, is at the negative or the receiving end of what has happened between US and Venezuela at this point in time. Going back to Mr. Chokalingam and getting his viewpoint as well, looking at how the geopolitics and geoeconomics is again taking center stage once again. You heard Mr. Taneja really talk about how the oil dynamics will change. What do you think for an average Indian investor is the thing to do at this point, sir?
One has to really watch whether this political tension jumps to different pockets, especially in Asia itself. That is the only area of concern. Otherwise, by any chance, if it subsides this issue, there will be a plenty of opportunity for Indian equity from Indian equity market, because I also heard that expert is saying oil might settle at 60, but I have a different view. If
Okay.
political tension subsides, oil can even fall below to $50 also. Let us not forget the fact that the renewable energy across the world is taking up in a big way, and oil intensity in the war is also going down because of thanks to growth, and oil intensity in the economic growth is also going down over the last 10-15 years. So at the same time, OPEC is not willing to cut down oil output at all. So therefore, India is a better positioned in terms of cheap oil, which is already down 26% from 52-week high, and a strong growth story with a 7% GDP, quite assured for next 2 years. And let us not forget the fact that in the last 1 month, US
Yeah.
corporate particularly, they have committed a nearly $135 billion of investment in India. So things are looking too good. Yes, if political tension spreads in many pockets of the world, our rupee will weaken further, and FII selling will continue, and therefore market would remain stagnant with stability in Sensex and Nifty, but erosion in
Sure.
small and mid will continue.
Okay. Let's also shift focus now to the aviation space, viewers. Civil Aviation Minister Ram Mohan Naidu has actually spoken exclusively on Indigo's operations and curtailments. He's also said that curtailments are dynamic to avoid passenger inconvenience, and with an official announcement coming in soon on Jewar Airport, compliance is being fast-tracked now, with inauguration expected by late January or in early February. Let's listen in to what he had to say.
Though I'm going straight to the point, for Jewar, Noida Airport as well as Bhogapuram Airport, what's the window timeline that you're looking at?
Noida, you know that last month only we have had one meeting with the Honorable Chief Minister, also trying to wrap up all the last minute works that are required from there. And BCAS has been very actively involved in completing all the necessary approvals done. So either by the end of this month or early next month, we want to see the inauguration of the operations there in Jewar.
DGCA report on Indigo fiasco. Everybody is asking, when are those actions going to be taken by the Ministry of Civil Aviation?
Very soon, I can tell you that very soon we are going to take action. But we want to be very sure and thorough with analyzing the report and what exactly, because whatever actions we take, one should be a lesson. And also on the other side, it should be a deterrent for future people to not come across this kind of situation.
But there was a curtailment of 10%. Indigo is back to their numbers of operation that they were doing as usual. So the business is as usual.
It has been a dynamic curtailment for now, but officially which 10% has to be done, we are working out, so that, because you remember I've told that the connectivity disruption or the 10% curtailment shouldn't be as such that where Indigo might be operating solely to a certain destination, those people shouldn't be affected. While keeping the connectivity intact, where there are major operations from their side, those curtailments should happen. So that also we are parallelly working out, and we are curtailing on the other side, which is dynamic in nature. So that is why you might feel that, okay, this here is not happening, but officially also we'll make that announcement.
Mr. Chokalingam, how are you viewing the aviation sector at this point in time? A minute to go before the market shuts off. A quick comment there.
Yeah, it's unfortunate development for Indigo, but I believe after another possibly 5-10% correction, it will bounce back. It's very difficult to reduce the competitive capability of Indigo, and oil price also, as I said, is likely to remain further weak. That will help Indigo to recover. So I don't see any major crisis for Indigo stock.
All right, viewers, let's quickly look at how the markets are going to be shutting shop now. A minute to go before we, close for the day as far as the markets are concerned. Of course, we've had a volatile day. 26,240 is where the Nifty is ending at. Remember, this is about a 0.25% lower in trade. There's an about 85 points of a decline that you've seen. The Nifty Bank also at about 60,052 odd levels. Again, seeing that pick up from the low levels, but still ending the session in the red today. Let's also pull up some of the other key sectors there. IT sector is the top laggard in trade today. Remember, IT sector will also be in focus, viewers, because just in a week's time, we will start seeing all the IT numbers from Q3 results coming in as well. But IT sector has lost a bit of ground. Oil and gas has declined. Look at infrastructure, pharma. These are all the sectors that have declined in trade. But look at the gainers there on your screens. Real estate, FMCG. Those are the sectors that have really managed to pull up despite the choppiness that we've seen in the markets. Metals also have managed to shine bright. You can also see small caps also inching higher. There's a divided trade between small caps and mid caps today. PSU banks that were the top movers today managed to hold on to the gains but did see some profit taking along the way today. Let's also look at the top movers as far as the Nifty is concerned. From the FMCG pack, it's Nestle. So remember, the market sentiment is moving towards defensives. Whenever there is a large part of buying that happens in FMCG, in pharma kind of spaces, you will see that people are shifting towards defenses, more protected sectors. So 2.7% higher for Nestle. BEL, of course, from the defense space. Whenever geopolitical concerns happen, it's the defense stocks that definitely cheer. And 2.6% higher for that one. Eicher Motors, that's another one that's also on the move. Hindustan Aeronautics, that's also on the move. Tata Steel, you can also look at Asian Paints. These are some of the other stocks that have managed to pull up into the green as far as the markets are concerned. But top laggards, IT names there. Wipro, Infosys, HCL Tech, all three of them declining. HDFC Bank and Bajaj Finance also among the top laggards in trade. But let's quickly look at the top stock query that we have for Mr. Chokalingam from one of our viewers then. This is Samar Sharma from Delhi. He says that with the Venezuela crisis that's ongoing and unfolding, which oil stocks are worth investing into? Mr. Chokalingam.
I won't suggest because today so much of tension in the world, oil is very weak. So I don't think these tensions are going to increase the oil price. So rather, if these tensions subside, you can look at stocks which are the user of oil or oil derivatives. So I would even suggest a stock like Indigo or tire stocks. Wait for a couple of days. If tension subsides, then the oil price will fall. Then you can look at stock like Indigo or some stocks in tire space.
Okay, next we have Pratna Chauhan from Mumbai saying that I want to invest 1 lakh rupees. Should I look at IT? Should I look at defense sector? Which has the better returns going forward from here?
I would suggest stocks like L&T or even in a banking name, some PSU banks like Bank of India, because these two companies are operating in sector where right now there is a momentum in the sectoral growth, and going forward also they offer a lot of potential. So because IT sector is expected to grow only 2 to 4%, at least for next 1-2 years, so they don't offer much optimism. Maybe they can be a defensive play when the rupee is under weak. So if somebody wants to play on defensive, then Infosys could be one IT stock which one can consider.
Fair point. Let's take the last query that we have from our viewers today. This is Pranav Sen from Kolkata, who wants to know from you, Mr. Chokalingam, right ahead of the union budget, which are the sectors that you should be watching out for and keeping on his radar?
So this time definitely there will be a hike in the railway capex because last year it was not much. So one can look at the select railway stocks.
Railway stocks could definitely be in focus. All right, Mr. Chokalingam, thank you so much then for being with us on the show and, of course, for highlighting for all our viewers what exactly should be their strategy when it comes to upcoming ahead of the budget and how should you maneuver the current geopolitical concerns as well. 26,250, that's where the Nifty has shut shop, viewers. On your screens today, again, a week closing. This is a fresh start to another week. Last week, we had 2 days of January and the trade was fantastic. Today, we have given up some of those gains. Remember, we were celebrating all-time high levels on the Nifty Bank, several other sectors as well. But because of the geopolitical concerns, the sentiment has again dropped down. Let's see whether this cautiousness continues into the markets even going forward. And with that, viewers, it's now a wrap on the Business Today show. In case you too have any questions about your investments in mutual funds, your SIPs, your stocks or gold-related queries, you can send them to us on the numbers that's flashing on your screens. And don't forget now to tune in at 9 a.m. tomorrow morning for all the opening action with Abba Bakaya.